Monday, January 3rd, 2022, Monaco 64, home of alternative economics and contrarian views. Today we're going to talk about 8 possible or potential official currency reset. And why do I say official? Well, because I think it could happen unofficially as well through the market, through people's actions, the general public's actions. But of course, the powers that be always want to have control over things. And the reason I'm going over this is because I see a lot of questions about a currency reset. What are they going to back the new digital currency with? Is it going to be a cryptocurrency? Some people think they're going to back it with Bitcoin. Some people think they're going to back it with gold or silver, or think they should, a bit like us here. But honestly, I think the powers that be are going to try to keep the currency very similar to what it is now. And all they're going to do is try to change the way people access the currency, change the way maybe people get that currency. Instead of getting it through their banks, commercial, private banks, they might get it from the central bank. But one thing's for sure, it's still going to be fiat currency. And that's why if we do have some kind of CBDC or currency reset, as many expect, I don't think anything will change. You still need to have the right assets, in my opinion, to get by. And to accumulate assets, of course, you will have had to save over your lifetime, depending on your age. And I don't think anything changes. I still personally think that paper assets like stocks, bonds, real estate are highly overvalued. And that's why I favor hard assets, mainly, of course, physical gold and silver, commodity stocks, miners, of course, gold and silver miners. And I favor that. And the powers that be can do whatever they want. They can bring a digital currency, a CBDC. Unfortunately, we'll probably have to use it. But don't think that you won't be able to exchange your assets for that currency. You will be able to. But they're going to make it very hard for the general public to keep a hold of their assets in the next 12 months, maybe 24 months, I think. That's what's going to be the hard part. I think we're going to see a lot of volatility in the markets, and people, especially people with leverage, could get hurt very, very badly in this environment. And that's why I think as we go forward in 2022 and 2023, it's more important than ever not to have leverage, to be out of debt, because it will be harder for them to control you if you're able to have assets. And one of the reasons why I stick to physical gold and silver outside the system, and whatever it may be, whatever kind of asset, hard asset, tangible asset, you might want to have outside the system. I think that's a good strategy because it keeps yes, your wealth outside the system. Of course, if you want to hold stocks like commodity stocks or gold and silver miners, it's going to be in the system. It's up to you to decide what proportion of your assets you want in the system. I think it could be very volatile, and it could also be a matter of counterparty risk could become very important. You might have assets that are doing well in the system, but if banks go bust, brokerages go bust, You have to think about that. And I do think about that as well with my gold and silver mining investments. So how do brokerages work? Are they like banks? No. The thing about brokerage houses or stockbrokers is if you send them, let's say, $1,000 and you buy $500 worth of stock and you keep $500 in cash, they will put that cash with their bank. Brokerage houses are usually not banks. I mean, unless you bank with JP Morgan or the big investment banks that are also commercial banks, brokerage houses are not banks. So they will put your cash with their bank. And it's important that you check who your broker uses, even though I don't think it will make much difference because I think the whole banking system is very fragile. We saw recently, and I spoke yesterday actually in my live stream about Bank of America and their silver positions. That story was written by originally Ted Butler on the 30th of December because one of the persons that follows him sent an email saying, my broker Merrill Lynch has, they're part of Bank of America. So that's what you have to worry about, counterparty risk. So yes, I don't think we should be too bogged down about new currencies or things like that. I think we should be more worried about what assets we have. And of course, if they happen to back a new currency with gold or gold and silver, yeah, that's even better. But I wouldn't bet on it. As it's been said many times, and it was Jim Sinclair who coined this term. Some people attributed it to Greg Mannarino, but I heard it first from Jim Sinclair, and he's been around a lot longer than Greg Mannarino. As he said, you got to be your own central banker, and you should care less, really, what currency they have. Not saying that you won't have to use it. So that's my first message for you in this new year. Don't get too bogged down about currency resets. Just make sure you have the right assets in this inflationary era that we're in. Yes, I think rising prices are going to shock people even more in 2022. 2021 was the year that even the chairman of the Federal Reserve admitted he was wrong and that inflation wasn't transitory. Now a lot of people expect inflation to come down, and they're going to be proven wrong as well. And that's my view. So with that, let's quickly look at where the markets are this morning. It's 8:45 a.m. London time. So spot gold is at $18.2225. It's down just over $6. It has been up as high as $18.32, and the low is $18.2090. So we're near the lows. I think London is closed today. Maybe most of Europe might be closed, but the US is open. They like their holidays here in Europe. I mean, we've already had so much time off for Christmas, but they need to have a holiday on the Monday as well after New Year. I don't get that. I don't get that. But anyway, silver is down 17 cents or 0.75% at 23.13. Low's been 23.06, high 23.42. So some people say, oh, January is a good month for gold and silver. We'll have to see. It's early doors, I guess. The Dow future is up 134 points. So we continue to see strength in the stock market and bond markets. They're defying logic, but that's how markets are. I've checked, though, that the Federal Reserve, they said that they're going to taper by 30 billion. And they announced that at their meeting, last meeting. They said they're going to start tapering on their meeting on the 3rd of November. Then they said, oh, we're going to double that. We're going to do 30 billion. But I've checked, and for the month of December, they did 107 billion of QE, which is 13 billion less than the 120 billion. But they said they're going to do 30 billion. It should have been 90 billion. So they're still adding a lot of reserves. They're still pumping a lot of liquidity into the system. So we need to keep a close eye on the Fed's balance sheet to see if they're lying about what they're doing. But I would also say that there's something called FASB 56 that allows the Fed and the bankers on Wall Street to do things and keep it hidden. That's part of FASB 56. It's not just the government doing things and keeping it hidden. It's also big corporations, and the excuse they give is national security. So we need to keep that in mind. The Fed might say they're tapering, but they could have another set of books under FASB 56 that's secret, where they're actually pumping a lot of liquidity into the banks. And that's why we could see the stock market continue to go higher. The NASDAQ futures up 76 and the S&P futures up 18. The FTSE future is up 33 at 74.20. To the currencies, we've got sterling unchanged basically at 135.20. The euro is down 0.25%, 113.40. The dollar is up 0.1% versus the yen at 115.25. A dollar on the back foot versus the yuan. We're below 636. It's down slightly, but the technical picture doesn't look good for the dollar versus the Chinese currency. Aussie dollar down slightly at 72.62. The dollar is up 0.25% versus the Canadian dollar, 126.72. And the Kiwi dollar is unchanged, 68.40. To the commodities, WTI crude is up over 1% at 76.03. High-grade copper is down slightly at 445.20. And to finish off, have a look at the 10-year yield. 10-year yield is at 1.51%, down just over 1 basis point. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great start to the week and the year. Take care. Bye.